And welcome once again to Investor's Edge. I'm Gary Kaltbaum, your host. Thanks for being with us today. Glad you're here, ladies and gentlemen. Happy that you are listening. It is 11/11/2025. It's Veterans Day. We think our veterans are not revered as much as they should be. We think that so much time has passed that people have forgotten what these men and women have gone through in their lives. I've mentioned on this show before that I used to do paintball when my kids were young, and I remember getting hit in the side with a paintball, whatever, and I had a welt on my side that was there for like 6 months. And it was painful. And I whined and I complained. And all I think to myself is, I'm whining about paintball while these people are tiptoeing on mines, ducking bullets, looking out for IEDs, losing their limbs, dying, all in the name of protecting the country. And I just don't think, I think they've been let down. That's my take. Do you know, I get upgraded in Delta because I am up there. If I ever see a veteran, I give him my seat all the time. There was one time where the guy walked on saying he was military. I gave him my first class, and afterwards I find out he lied. How's that one? Anyway, you get some of those. Just something to think about on Veterans Day. And you read stories about some of them. Again, I whined and complained when I got hit with a paintball gun. Anyway, we can't do enough for them. And I believe our VA administration had let them down for many a moon. And I know it's gotten better throughout the last few years, but I still think it's subpar. At least that's what I read. And you know the media is never wrong. Okay. Hey, in case you don't know, this is serious talk on everything that affects you. This is Investor's Edge. I'm Gary Kaltbaum. We'll talk markets, the economy, your job, your industry, and all the other crap that's being spewed out there because Mr. Logic, moi, strikes again. And if you do not get this radio show in your city, we'll post it at GaryK.com. We'll also post on our X feed. And if you don't follow us on X, you should. If you'd like to email me, just be nice. It'll also go on the podcast apps and the BizTV YouTube channel. And just so you know, we have in the midst of hiring somebody, full radio, podcast, TV studio, YouTube channel. When we do the radio show, we'll be posting charts in real time. All getting done. And we're going to put a second hour podcast, and I think we will title it Mr. Logic. Because Mr. Logic has struck again. Just recently, we had told you, what are they, nuts? A 50-year mortgage? Have they thought this thing through? Makes no economic sense whatsoever. A 50-year mortgage? A 30-year mortgage is terrible. And as we have said to you throughout the years, go do an amortization table of a 15 versus 30. Yes, you are going to pay a higher monthly payment on the 15-year, but look how quickly you build up a nest egg. Because supposedly when you own a home, you're supposed to own the home. And when you take out a mortgage, you're in debt, but you're supposed to have some principal. So if you buy a $500,000 home and they ask for 5%, you put down 25 and you owe 475. You put down 10, you owe 450. So that 50 grand, if the price just stays the same, goes onto one side of your balance sheet from cash to homeowner's equity, your equity. And then you start making payments. And the problem is, on a 30-year mortgage versus 15, on a 15-year, I'm just going to throw out a number. I'm making it up. Let's say you're on a 15, you're given $1,500 a month. Okay? Well, like 600 of it goes to the equity side, your side. On the 30-year, your payment's $1,200. $1,190 of it goes towards interest. On the 50-year, forget it. Asinine, ass 10, ass 11 idea. And Mr. Logic is struck again because we have found out that the administration is pissed off at Bill Pulte for giving him the idea. But of course the president posted it, and they are backing away from it already. And I must tell you, in case you don't know Bill Pulte, he is the grandson of William Pulte, who is the founder of Pulte Group, the big, great residential home construction company. Now, nothing personal on the director of the Federal Housing Finance Agency. I wish I had 5 minutes with him before he put out this idea, because Mr. Logic would have saved him. With one sheet of paper, I would have saved him. And their whole idea is, well, you're making a smaller payment. No, you're not. In order to own a home, you've got to build equity with a home with your payments. A smaller payment does nothing except pay interest. You know who's a happy camper? The lenders. So there's your 50-year mortgage. Struck down. I doubt we're going to hear too much about it. And I cannot believe some people on social media were trying to argue with me. Only because it came out of the Trump administration. Of course, if it came out of the Biden administration, those same MAGA people would be having fits. I wish people would be like us. Have no love for anybody and just call balls and strikes. Which takes me to second part of Mr. Logic. Do you know they proposed a 15-year auto loan? What? A 15-year auto loan on a depreciating asset. I don't know which is more stupid and illogical from Mr. Logic. A 50-year mortgage or a 15-year auto loan? All in the name of making things affordable, but it makes it more expensive. I can't believe these brilliant people in Washington, D.C. don't realize by extending the length of payments, it makes it more expensive, not more affordable. Yeah, but your monthly pay... No! It's horrendous. Mr. Logic is struck again. And by the way, on your next homes, please look at a 15 versus a 30. And maybe if the 15 is too much of a payment, maybe you're paying too much for the house and you need a lesser house. Go look at the difference. Now, if you're disciplined, you get the 30, but you make one extra payment a year. Or each month you send in a certain amount. You know what that is? Equity. That's owning a home. A 15-year auto loan. Woe is me. Anyway, Mr. Logic has struck again with his logical thoughts, and that's going to be our show. We'll do a second hour, Mr. Logic, and it's going to be pure, the illogic of Washington, D.C. and we'll hit them hard. And hopefully they'll be hearing us. Why? $38 trillion of debt. They're proud that they're going to do $1.8 trillion deficit this year. They're proud of that. Insanity. $1.2 trillion to interest. And it only gets worse. Hey, up next, the markets. They were quite interesting today. Thanks for being here. This is the one and only Investor's Edge. And welcome once again to Investor's Edge. Revenge of the Nerds. Anybody ever see that movie? From a long time ago? Anyway, today was Revenge of the Nerds in the market. The Dow today was up 559 points. The NASDAQ was down 58 and the NASDAQ 100 down 78. It was the Revenge of the Nerds. It took, to show you what kind of concentration the market has with tech, it took the Dow to be up 500 today to have the S&P 500 even up. In the Dow today, what went on? Well, here's what's going on. Listen carefully. Medicals and drugs and healthcare continue to get better. Medicals, drugs, and healthcare continue to get better. Amgen in the Dow up $15 today. 95 Dow points on 1% earnings growth. But hey, market likes it. So biotech's been better. Eli Lilly up another 22 today. Drugs have been better, and you know what's going on with them. Other drug companies, Good Day, AbbVie, Novo Nordisk, and all that. Merck in the Dow, which was in a bear market for a long time, is coming out of the bear market. That was up 4. But you also had Goldman Sachs up 13, trying to get a little breakout here. That's about 80 some odd Dow points. McDonald's up almost 8 today. I don't know why. We call that the defensive restaurant because most of the other restaurant stocks are in a brutal bear market. But it was Revenge of the Nerds. What did they sell off today? The semiconductors. It was found out that SoftBank sold all their NVIDIA stock, and I guess they've been an investor for a long time. So NVIDIA gave back 5 and change. Today was down 7 and change. And the SOX was down about 170 something. So rough day there. We'll call that a normal pullback at this juncture. But we'll be watching it closely. Why? Oh, it's pretty simple. We know why. They're over-owned, over-loved, over-leveraged. And when all heck breaks loose, oh my goodness, what could possibly happen? End of the day, though, AMD, they're at an analyst day, and after the market right now is up $10. They said something about something. So maybe that helps tomorrow with the semis. We'll see. But Revenge of the Nerds. What else in nerd land? You bounced the consumer staples today. You bounced the home builders. You bounced the insurance. You bounced waste management. You bounced managed care. You bounced some retail, not all. But for me, the story was twofold. A, the medical health care, and oils have been better on higher oil prices. Oils have been better on higher oil prices. So Revenge of the Nerds. And in the Dow today, there was Caterpillar was down 3. NVIDIA was down 5. That's it. Huh. Yeah, Microsoft reversed up today. That's good to see. So Revenge of the Nerds. Yields are only up a little bit. Gold, as we told you, we thought it made the turn yesterday, was up a little bit more today. Jury will still be out on that, but looks like it wants to do more. Crypto. We've warned. Well, first off, you're welcome on MicroStrategy. We warned you about that. We're very careful with our words. Others have called it a scheme. We're not going to use that word. We're just going to say weird. You are borrowing and issuing stock to buy more Bitcoin. How's that going to work out? And there's also debt due, and I'm being told they don't even have enough to cover the debt. Well, MicroStrategy from a lower high in July, 457 is down to 231. You are welcome. What is interesting, and this is something I'm always careful about, and you should always be careful about, the man's stock is being destroyed. Hit a high of 543 a year ago. It's 231 today. The high was 457 in July, as I said, a lower high. The man goes on TV like this stock has been skyrocketing with absolute unadulterated conviction that Bitcoin is going to 13 million. No, 13 million. And we're not going to argue it. I never thought Bitcoin would be 100,000. I hope it goes to 13 million. I really do. But his stock is getting shredded. Bitcoin is almost in a bear market. And you know, the last big bear market dropped 75%, and he's on TV talking like it's soaring. Not sure I'm thrilled with that. But you're welcome. And Bitcoin had another bad day. Ethereum had another bad day. MicroStrategy another bad day. And Coinbase another bad day. Because they're all tied to it. But also something else I am noticing. The miners of Bitcoin, which have been strong, they have been topping out. And by the way, I don't even understand some of this mining crap. I don't even understand it. By the way, that's Winston. I'll have to take care of that at the break. Anyway, the miners are now getting hit pretty darn good, and I just be careful. I'm not even going to name names, but I'm noticing 40% drops in the last 2 weeks. 40% drops in the last 2 weeks. Not to mention, we told you about the other no-sale stuff is getting destroyed even more. The quantum computers, the nuclear, the rare earth, the robo-taxis, and all that crap. We warned you about the no sales, that eventually they're all going to go back to where they came from. We don't know when it's going to happen. We know how long it's going to take. All I can tell you, in the last 6 weeks, I see a bunch down 50% from the highs, and I see a couple down 70%. We hope you listened. I think a lot of people didn't, because they want to believe, because they've been touted so much, that but they forgot, do not pay $10 for $1 bills. And that's what they did. And if they did not trade out, they're having a rough time, and we feel terrible for them. We don't like seeing anybody lose a lot of money. Up next, more on these markets. Going to take care of Winston. No more barking. I'm Gary. This is the one and only Investor's Edge. All right. We put Winston in the bedroom. And, you know, I do the show out of the house. And we turned on ESPN. He gave him a couple of nice little whatchamadoogies. Anyway. By the way, my Winston, as I've told you, 13. At 10, was diagnosed with major aggressive cancer, 6 months to live, but do chemo and maybe he'll last a year. We put him on chemo. Within 2 days, he was out of it. We got him off chemo. We said, screw it. 6 months later, he's good. A year later, he's good. We do another test. Oh, cancer came back. Well, excuse me, we did surgery, got rid of it, but then it came back. We did one more surgery, and it's 2 years later. 6 months ago, they said, bad cancer. It's in a bad spot now. You can't do surgery. It's 6 months later. He's fine. 3 years. And originally, we were told 6 months. Winston, the man. Got to dig him. I don't know what I'm going to do without him. You have dogs, right? This dog, I don't know what I did to earn it. If I take a step to the left, he takes a step to the left. If I take a step to the right, he takes a step to the right. If I lay down, he lays down. If I stand up, he stands up. It's one of those things. Anyway, speaking of no logic, let me just tell you a few things going on. Number one, so I'm putting together a little thing in New York City for business. And it's just going to be for like 22 people for dinner and restaurants. And it's expensive in New York City, for dinner out there. So I wrote like 5 or 6 restaurants, and one of them came back, well, our minimum's $12,000 for that. I'm like, what? $600 a person? Your meals are like $60. Yeah, but you're 20. What's the difference? Well, and you're not even putting me in a room. You put me in the side of the restaurant. Well, it's 20. You do realize if you had a reasonable number, there'd be a chance you'd have me there. The other one was $6,300 a person. And I'm trying to talk to these people. Dudes. And one of them said holidays were open. I go, but obviously the holiday isn't treating you so great. It's already November. Anyway, it's a little weird out there. $12,000 for 22 people at a restaurant in New York City, where probably it's $100 a person if you order a nice steak. They wanted to. Oh, by the way, the $12,000 was not included a 5% fee, taxes, and tip. Talk about not being Mr. Logic. Now, back on the affordability. So they come up with these cockamamie ideas. Well, 15-year auto loan, 50-year mortgage, that way you can afford your payments. No, it hurts your affordability. It kills you. And again, don't take my word for it. Go online, put in a house, $500,000, go 6%, and put in a 15-year and look at the payments. And go look at the 30, and they'll also show you how much will go towards your equity and towards your interest. It is night and day, the 15 versus the 30. And then you throw in the 50. It's the stupidest idea in history. At like year 30, you still owe all the money. It's all interest. I had one person argue with me, yeah, but most people buy their house and sell it in 7 years. I said, terrific. So how does a 50-year help you? It still doesn't help in any way, shape, or form. Anyway, just letting you know. Somehow I'm going to get my butt into Mar-a-Lago, the White House, and sit them down and explain to them. It's really easy. What should they do? What do you do about affordability? You know it's a problem. It is. As we have told you here, in housing, fantasy land is coming down. But not fast, but decently. You know, I looked at Boca Raton houses. I couldn't believe what prices are in Boca Raton. You can't live in Boca. You can't buy a house in Boca Raton unless you're a multimillionaire these days. Even a decent house in Miami. But you know what's happening now? You got like 500 homes for sale, and they're all competing with each other. And guess what happens when you have too many homes for sale and they're all competing with each other? Well, the first one starts lowering, and the second, and that's how the process goes. So what should government do to help you out with affordability? Well, listen to what Mr. Logic has to say. Get the hell out of the way and leave us the hell alone and let the market do its job. That's what they should do. Do you know why? Government caused the problem. The central bank printed to $9 trillion, took rates down to zero, kept them there for too freaking long, created 3% mortgages to where people refused to sell, forced up prices everywhere. Who wants to sell a home with a 3% mortgage to get one for 7%? And not until a few years later is inventory finally picked up because people want to move. And now the prices are coming down. It was all the government, and they're printing of money, and Biden coming in with his stupid lying $1.8 trillion BS, where President Trump came in and promised to do something about it and did nothing about it. The problem is government and their massive spending and their massive deficits, and President Trump now wanting to do 2% Fed funds, which will import more inflation again and screw things up even more. Get out of the way. The market itself has its way of burning out froth and speculation and overpriced dumb, where we get some equilibrium at a certain level. Get out of the way. What about the supermarket? It's government again. The tariffs. Why do you think he wants to give big bucks to the farmers? Because he's killing the farmers. The soybean thing is killing the farmers. I can go on and on. Oh, coffee. Duh. Coffee prices go up. 50% on Brazil. What's their biggest import? Coffee. Now, not to his blame, the problem with prices at the supermarket, once they go up, it's not easy coming down. Go look at the potato chips. The party bag of potato chips is the old big bag. The old big bag is now the normal size bag, and there's less chips in it. Shrinkflation. That's not easy. Can't blame the president on that stuff. It's the nature of the beast. And as I said to you, I was so surprised the other day. 40 some odd million people get food stamps? Didn't even know that. So as I said to you, when President Trump came in, the first thing I would do is shut that border. People were dying. They were drowning. They were dying in the back of trucks. Children missing. Families separated. Biden never got any blame because of the corrupt sleazebag media. And that's what President did. A+++. You know what the second thing he should have been doing? Jobs. 42 million people on food stamps? What if we can get them off and put them into the workforce? That's up next on this, the one and only Investor's Edge. So, you know what I would have been doing? There's no way doing it on a personal level, but you do it on a community level. Whatever push you have to do to get those people into jobs, you go and do it. I have no idea what program it would have been. how it had been administered, how you get it done, what companies you would partner with. Man, oh man. Imagine if you can turn the 40 million down to 20 million. Imagine that. What a difference. The cost to us, number one, but number two, imagine if you roll that back, that'd be marvelous. Fantastic. And you got to do that on local level. Trades. Trade schools. You don't have time to put people into college for 4 years if they haven't been. That was a big wow. That was a big wow. All right. I did tell you they fired the Giants coach yesterday, right? Okay, good. Yay. A few notes. And again, OKLO is one of those zero sales companies. They just reported earnings, another loss and another no sales for the quarter. And $15 billion market cap. We're just letting you know. They reported no sales. Stock's only down another $1 in the aftermarket. It just went from 194 to 104. When we go into a bear market, if there's still no sales, it's $10. If there's still no sales. And by the way, you think I'm crazy? Go study every bear market. What happens to no sales companies? But this is the thing I'm talking about. And I hate the fact that these companies are even talked up. I hate the fact these companies are even talked up. We will never, ever, ever talk up a no sales company here. And very, very rarely talk companies that lose money. Why? Rules. Companies that lose money in bear markets get destroyed. Destroyed. Absolutely destroyed. And we're not even a bear market. And these no sales companies are already down 50, 60%. Gold. Turned up yesterday, a little better today. I'm still not 1,000% confident. But turned up yesterday, better today. As we said on the way down, we didn't think the bull market was over. It was have to go through some what we call time and price. And that just means pulling back, settling down, doing nothing, finding an area of support, then turning back up. Well, we'll see. Just want to let you know. That was yesterday. And again, a little better today. And what's driving it beats the heck out of me. The AI trade. There are some things I'm worried about. You know, Oracle announced this big gargantuan number and has gone from 345 to 236. And what we are reading and confirming, a lot of debt and a lot of promises. And that goes for some others also. The latest disaster is this CoreWeave, very highly touted. IPO $40, dropped to 33, up to 187. It's 88. Dropped $17 today on guess what? Another loss, even though sales are skyrocketing. The worry is the sales skyrocketing are front-loaded. And if they're still losing money on sales skyrocketing, what happens if front-loaded sales go bye-bye? Well, the market is already reacting to that. We'll see. We'll keep you informed. We're asked about it a lot. We've been asked incessantly about APP, which dropped $56 today, 9%. When stocks trade wide and loose, what we call all over the map, we tend to bug out. That's what this stock has been doing. Wide and loose, not good. Tight trading on a daily basis, good. And we've been asked about it a lot because I guess people like crazy movers. I get it. Crazy movers. Circling back, Revenge of the Nerds. Do I think that can go on for a while? Sure. Great day for the Dow. Pretty darn good day for my stuff screen. And the stuff screen is made up of oils and housing and transports and airlines and cruise lines and retail and stuff. But as I scan them, and we're talking about 500 names, I found about 25 with good chart patterns. Just 25. So there's going to be more work to be done with those. Oils definitely have something going on, and we're paying much more attention to them. All right. That all said, you have a great evening. Drive carefully when you get home. Do like we do, quite simple. Make sure you hug your family and hug your children. They will feel better. You'll feel better. I promise. Stay well, be well. Thanks for joining. And remember, no bias, no agenda, no ulterior motive. Have a great one. Good night.